Hello traders everyone, and welcome to our new video for the end of the week. As you know, this is some kind of a recap review of what's been going on so far. And as you know, yesterday the most important was the US CPI data came out slightly above expectations at 2.4%, but still down from 2.5. So what we are seeing is that dollar is actually not moving much for now, but I still think that based on the price action that we see and based on some economic data, that maybe Fed will have to slow down their potential dovish approach, and this can keep maybe US dollar in uptrend. Now, before we go to some of the charts, please make sure to subscribe to this channel, press a like, or leave us a comment below this video. Also, if you want to join our premium memberships, we still have this 2-for-1 offer going on, meaning you will get first 2 months for the price of one. Now let's go into the chart. So before maybe I look at the euro dollar, I want to look at this basic technical chart. Okay, so it's the full Elliott wave cycle where you have 5 waves in one direction and then 3 waves in counter-trend, like a counter-trend movement. So these 5 wave moves shows direction of a trend. Can be just temporary trend, can be a higher degree trend. Keep in mind that Elliott wave structures are fractal, meaning that these kind of patterns can be spotted on many different time frames. So now when we have these 5 waves down, well, we can expect 3 wave rally, and then after this 3 wave bounce we could continue even lower. And if you look closely now on this intraday time frame here on the euro dollar pair, we can very nicely count 5 waves down. It's even better and clearer wave structure on dollar index, of course, on the opposite side, to the upside. And now when we have these 5 waves down, we see also pair coming into this potential 108.80, 109 support, which was the swing low from mid of August. So maybe there will be some price stabilization and rally in the next few trading days. Also, we see some small divergences on the RSI. Even better are shown on the smaller time frame, like a 1 hour time frame. So I would not be surprised if we see some kind of a rally. Of course, as I said, this rally will ideally unfold in 3 waves. So if you want to join this downtrend, okay, or any kind of a market where you see a very strong decline, you want firstly to wait on this ABC rally, because this will allow you to enter the market at better prices. And if we try to focus on some resistance levels, keep in mind that normally 3 wave retracement will take the pair back into the area of a former wave 4. So that's the first resistance around 1.10, also psychological level. Why I think that this one is important is because we broke through this swing low quite aggressively. So if we think that trend, because of that breakout, the trend has changed from bullish to bearish mode, then certainly this area that was taken out should then act as a resistance on the next bounce. I also think that this one is quite interesting levels here around 1.1040, because of course nothing works like in a textbook. Okay, so definitely there we can allow prices to extend a little bit higher. So 1.1040 is also next level to watch. So this whole zone can be quite attractive for potential shorts, especially if we see movement into that area in 3 waves, not in 1 wave. We need 3 waves, okay, because that's the most important structure when it comes to correction. So if we see a 3 wave movement into that area, I think that there is a chance that euro will continue even lower. If that weakness will be very strong wave 3 or wave C, it doesn't really matter if you are more like an intraday trader. Now, what I also want to take a look at is gold. Now, gold, as you know, we've been covering this one quite a lot recently, and it was able to pull back a little bit, and possibly because dollar has made a pretty nice recovery. But what's interesting is that as soon as US dollar index yesterday found some resistance, what we have seen during later in the US session and during Asian hours, gold moved to the upside. So if we'll see some pullback higher on the euro dollar, meaning dollar index will come a little bit lower, this will allow gold potentially breaking higher because it's doing very well. Even if there will be new issues with inflation, keep in mind that gold is known as an inflation hedge, so it can do well. Also, geopolitical issues, gold can do well. Also, if we are in a risk on mode, gold can do relatively well. So and in terms of the Elliott wave count, well, we definitely have a very nice ABC setback here back into this 2600 area that we have been tracking as a very important support because it was the channel support. And also notice that that was the swing high here back from mid of September when Fed cut the rates by 50 basis points. Okay, so that definitely was a very important trigger where we, after initial spike higher, market came down, but then we made a very sharp move to the upside. We clearly made an impressive rise here, and this certainly now looks like a very nice and beautiful support here. So what's even more important right now is that we have 3 waves from the most recent highs. Okay, so if you think that market has stopped out here, well, then as I said earlier and presented you with this chart, then you need 5 waves to the downside, right? But so far here we have 3 waves to the downside, and also the higher degree time frame is certainly showing us the bullish trend. So there is no reason to fight this trend. So I think that there's still chance for more upside. We could see 2700 as soon as we broke this trend line resistance. Also kind of represents like a upper line of potential bull flag. On the downside, what is really important is definitely this channel support. If this one is broken, and let's say that we go back below 2600, then of course this would be the first important indication that something is changing here. But the real confirmation for potential invalidation of the wave count and the top in place would be if market drops back below 2532. Why? Because we know that if we are in a strong impulsive uptrend and we expect more upside, then in impulsive sequence, wave 4 should not trade into the territory of a wave 1. So on the opposite side, this is presented on a bearish situation. You have this wave 4, okay, that we identified as a support, of course, on the opposite side, identified as a potential end of a wave 4, and now we are expecting market to move into the wave 5. So of course, this invalidation level is at the wave 1. So as long market is trading away from the area of a wave 1, that's when we can expect that this impulsive trend can resume. But of course, whenever we see overlap between these 2 waves, it means that trend has changed and that something else is going on. Either we go bearish or even neutral here on gold. So traders, thank you very much for watching this video. Again, subscribe to our channel, press a like, leave us a comment below this video, and also don't forget, again, we will have a webinar, free one, on Monday at 15 Central European time. So hope to see you there. Bye.